If it feels like you're paying more for everyday goods, it's because you are. Inflation is surging at the fastest pace in over 30 years and doesn't appear to be slowing down anytime soon. Some experts say high inflation is just temporary, while others think it could last well into next year, or longer. The Consumer Price Index, a key measure of inflation, rose 6.2% in October compared to a year ago, according to the most recent data from the Bureau of Labor Statistics. Supply chain disruptions and labor shortages have only exacerbated the issue. Spooked investors are now looking ahead to 2022, wondering how the Federal Reserve will react if inflation doesn't moderate and return to the central bank's long-term 2% target rate. Although investor fears over higher prices continue to rise, they haven't derailed markets just yet. Stocks remain near record highs, boosted by solid third-quarter earnings, and now look poised to rally through the holiday season. But market experts and economists interviewed by Forbes largely think higher inflation is here to stay, which could derail markets down the line. They also remain bullish on U.S. economic growth over the long run, despite a period of higher costs. The main concern, they say, is how the Federal Reserve will react, and how that will affect markets, which are likely to be bumpy next year. The Federal Reserve announced last month that it would begin reducing the historic level of stimulus it has been providing markets since the COVID-19 pandemic began, which is also making investors wary. Minneapolis Fed President Neel Kashkari said in an interview with CBS News earlier this month, investors shouldn't overreact to some of these temporary factors. He added, "The math suggests we're probably going to see somewhat higher readings over the next few months before they likely start to